Speaker.
Andrew Bailey.
Thank you, Mr. Speaker, and it's a pleasure to be talking on this appropriation bill. And of course, there are so many good things we could talk about, but I've chosen to talk about three of them today, Mr. Speaker. I want to focus on the budget outlook, looking after New Zealand families, and also this issue of diversification of our economy that we hear a lot about. Now, the 2015 budget builds on an improving economic outlook of sustained growth, rising wages, more numerous jobs, lower inflation, and of course lower interest rates. This government is focused on delivering a financial package, economic outlook that all New Zealanders can be proud of. In the latest Reserve Bank forecast, the economy grew just under 3.3%, and for the next 3 years is forecast to grow at roughly 2.5%. This rate, of course, compares very favourably with our international trading partners. And just to put that into context, Australia is currently growing at about 2.3%, which is close to America's growth rate of about 2.5%. And of course, Europe, being in the state where it is at the moment, is growing a little slower than that and less than 2%. And what's more, we may even achieve our budget surplus, which all the naysayers have been going on about and saying, no, we won't. At the 11th month period to 31st May, we had achieved a budget of $1.2 billion. It's not completely assured that we will get a budget surplus for the financial year end just ended, but it would be a fantastic outcome if we did, and one that all New Zealanders could be proud of. Just in terms of the financial position of this country, I think it's worthwhile just having a look at our debt figures. As at 31 May 2015, New Zealand's net Crown debt stood at just on $60 billion, which represented about 25% of GDP. Now, I think many of us are aware that by 2020, this government is focused on getting our net debt to GDP down to 20%. Now, interesting, again, if we do a little bit of comparison, the Australian debt position at the moment is just slightly higher than our 25%. But by the year 2020, where we will be at 20%, they are projected to be at 40%. 40%, i.e. double our debt ratio. And when you turn to England, they're currently at 90% and will decline over the 5-year period to 2020 to about 80%, i.e. 4 times the rate that New Zealand's debt is when we get to that same period. And if we go to America, currently sitting at about 110%, and in 5 years' time will still be greater than their combined GDP for that period. So thankfully, through good fiscal management, we've got an economy with growing economy with relatively low debt figures and heading in the right direction. The other thing is we've got a robust banking structure, and of course we heard a little bit about that today with some reviews going on about our banking structure. And as some of the members, or the more attentive members of the Finance and Expenditure Committee will be aware, last year the Reserve Bank undertook some very detailed modelling of our banking system just to see how robust it actually was. And they assumed 2 scenarios. The first scenario assumed that a sharp decline in growth rates brought about a catastrophic change in the Chinese market, which triggered, this was the assumption, which triggered a real GDP decline of about 4%, unemployment peaking at 13%, housing declining by 40% nationally, and the agricultural sector falling by about 40%. Now, for even some of our opposition members, I know that sounds pretty optimistic, but for most of us, that's a pretty gloomy outlook. Then in their second scenario, they assumed even more significant increases in interest rates. And what was apparent from the financial modelling that this group did was that the loan ratios increased to about 1.3 to 1.5% of their total loan book. But because of the existing profitability in the banking system, they could withstand these shocks. And also through good prudential management of those banks, they were able to be in a position where our banking system, even under those extreme pressures, were in a position where they could withstand it. And that shows what a robust banking sector we have, which is important to us all. Now, the second area I want to talk about today is families. And families. And we're determined to implement measures that look after and protect our families. And, of course, the standout in the budget was the $790 million package for our families. And it's a balanced package because what it does is increases the benefit rates for families with children. It also increases the child care arrangements for low-income families. And there's also an obligation for beneficiaries, parents, to enter the workforce when it gets apparent that they can and is appropriate, they should. Now, those benefit, that $790 million, is focused on the 160,000 families with 300,000 children earning less than $36,350. But not only did we spend the $790 million, but we also put in more money into the important areas, and the previous speaker was, of course, talking about health. A record amount went into health, $15.9 billion now spent on health in New Zealand. Another substantial amount went into education. We're now spending a record $10.8 billion in education. The announcements around the special housing areas, partly to do with allowing first home buyers to get into the market. So yes, and even in my electorate, Mr. Twyford, we even announced one very recently, Glenbrook Beach, another 800 houses going in there. 200 of them will be low-cost housing for people, on top of the 4,500 going into Wesley and Pukekohe, and the 700 new houses going into Belmont, probably about 3 kilometres away from from Wesley, all going to generate new low-cost housing for those first home buyers that we're so keen to get into the market. And the other thing we did in the budget was the $500 million that we committed over the next 3 years from savings from the ACC, the fantastic job that the board's been doing there. Now, the last thing I just want to turn my mind to is the diversification of this economy. And gee, don't we hear a lot about that from lots of people, particularly from the other side. And for some reason, and I don't know why, but Labor in particular wants to myopically focus on the dairy industry. Now, I've got to say to you, the dairy industry is important, and we all know that, but it's not fatal. We want to make sure that we have a viable dairy industry, but it's not fatal. It represents only 5% of our economy. So what I thought I would do, is to set out some of the breakdown of the New Zealand economy, just to demonstrate that diversification. The total primary industry represents about 7.4%. The manufacturing industry that people love to hit and say horrible things about, but the national government doesn't have that view. We think it's a viable industry, represents 11% of this industry. Construction, 7%. And then 64% of this economy is made up of goods and of services. So all the good things like ICT, the smallest, 3%, roughly $1 billion worth of earnings. Education, 4%. Healthcare, 6%. You keep going up to tourism, which of course is the largest of the services sector at 7%. And what's more, we're also getting good growth rates across all the regions. So we've talked about some of the regions. Bar plenty, 4.4. Canterbury, a similar amount. Auckland, 4.3. But even in the smaller regions, good, viable growth, including the member sitting beside me, Southland at 4%, a dynamic economy. But I also like the recent announcement around the new immigration changes, which are going to make sure some of the new immigrants coming into this country move to the region. So we've got two categories. First of all, the skilled migrants category, which we've said we're going to give you an extra 20 points if you move to a region and get a work out of Auckland. And then, of course, we've got the entrepreneurs category, which means that we're going to give an additional 20 points up to out of the total 120, so that if these entrepreneurs coming into New Zealand with good skills, with money, wanting to set up businesses out of Auckland, then they can do so, and they will be asked to move to those regions and help create new jobs for New Zealanders. Thank you very much.
I understand that the next call is a split call.